Now, I'm going to just start off. It is going into mid-March, and I'm going to talk a little bit about the markets here in general. So I'm going to start off with a couple of charts here. This is typical March performance. Second half is better. This is again from Almanac Trader at Almanac Trader, and this is a typical March performance. Now this goes back to 2000, recent 21 years, 2003 to 2023, 20 years in election years, all the way back down to 1950 to 2020, as they are split up every 4 years. As you can see, the dotted lines represent election years, and this is the different indexes. You have the Russell, the S&P, the Dow, and the NASDAQ. Typically, on non-election years, it's kind of a flat month, and we start to ramp up towards the end of the month. But during election years, we have this little swoon here going into mid-March, and we call it the Ides of March type of trade, where we see that weakness coming into the Ides of March. Now, next week, we have that time frame coming in. So, with that said, and this has been a very good market to follow seasonal trends. It's been pretty much spot on all year and the last year. So this is something I really do pay attention to going into this next week. As you can see, the election year, the downward move going into the 15th. Now, here's another kind of view of this right here. And you can see the March here, kind of a little swoon here, and then mid-March into the late March, we start to move up, and we have a tremendous rally going into the presidential election. So this is a big pivotal month for us, March going into April. Could be a nice bottom before a large rally starts. Now let's take a look at the chart now, and on Friday, we actually have that daily chart. We actually have what we call a reversal candle.